Welcome to This Week in Money. I'm Jim Goddard. Today, John Rubino, author of The Collapse of the Dollar and the Money Bubble, on where the next bubble might burst. And Dave Skarica, editor of Addicted to Profits, wonders where we might profit next. We talk to John Rubino right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600. Welcome to This Week in Money, the source for market opinions. Sitting in for Phil Mackesy, here is Jim Goddard.
My guest is John Rubino, author of the bestseller, Collapse of the Dollar, and the author of a brand new book, The Money Bubble, which people are also buying, it seems, in good numbers. Welcome to the show, John.
Hi, Jim. Great to talk to you again.
With Russia moving into Ukraine, and it seems every day they have bigger and bigger ideas on how much of that little country they want to scoop up, what is that doing to the U.S. dollar?
Well, the Ukraine thing is less important than Russia cutting these trade deals with China and India, in which they agree to trade energy and other things with their own currencies. That bypasses the dollar and removes a lot of the reason for the dollar's status as the world's reserve currency. You know, if other major trading powers don't require dollars to buy energy and other things, then the dollar becomes less necessary in central bank reserves and in the balance sheets of big trading countries and companies, and so the rebalancing that has to happen if this spreads would mean that the dollar would be sold by a lot of central banks and replaced by rubles or yuan or yen or euros. As part of a transition to a multi-reserve currency world. And that would put a lot of pressure on the dollar. And to the extent that it's gaining steam, that means pressure on the dollar is going to grow with time. And we risk the decline in the dollar's value becoming faster than the government would like. You know, we'd like the dollar to fall gradually because that helps our trade balance, but we don't want it to fall off the table. And so if we have kind of a discontinuity where people just realize that they've got to get out of dollars and they all try to head for the exit at the same time and the dollar just falls off the table, that's bad for us. And it's turning into a very real possibility as these trade deals and other things out there begin to spread.
Which currency do you think is going to, if the U.S. dollar is replaced as the world's reserve currency, which has the biggest shot at replacing it?
Gold. I think all the world's fiat currencies are being mismanaged to one extent or another because it's human nature. You know, you give some politicians and their minions the ability to create unlimited amounts of currency, and they're going to be corrupted by that power, and they're always going to abuse it, and that's what's happening around the world. So everybody is taking on too much debt, and not just the U.S., but Japan is deeply, grossly indebted. China took on more debt in the last 5 years than anybody else in the world. Europe is a basket case. And everybody is under pressure to create new currency in order to lessen the burden of their debts. In other words, if they make their currencies less valuable, they can pay off their debts in paper that isn't worth as much as it was when the debts were incurred. And that's an easier thing to do. And so eventually, we're going to have a global monetary reset in which everything is devalued versus gold, and then we go back on some version of the gold standard where these currencies are convertible into gold. And at that point, the global financial system will stabilize again. But until that time, it's going to be rising chaos.
Well, after World War II, the U.S. dollar replaced the pound sterling as the world's reserve currency, which basically is the money you use to buy oil. That was the big reason that they changed. The British pound, I've noticed, really has gained a lot of value over the last 6 months. Any chance that the Brits will take over?
No.
They'll be so disappointed to hear that.
Yeah, well, Britain is, in general, largely as badly run as everybody else. There's nobody who's doing a great job of managing their fiat currencies. Actually, Canada is probably among the best. And because you guys have a resource-based economy, you're going to tend to do well when the value of other currencies are falling, because that tends to raise the value of oil and gas and timber and gold and silver and all the other things that you produce. So in the inflationary scenario, resource-based currencies will tend to strengthen relative to banking-dominated currencies like the U.S. and Japan and much of Europe. So that's a good thing in the short run, but in the long run, it's a mess for everybody until we have a new monetary system that's based on something tangible. So this isn't going to be a fun ride, really, for anybody, because instability is basically bad for all forms of capitalism. Nobody wants to place a big bet on a factory when you have no idea what the value of your income stream is going to be, because you can't project the value of your currency out there. And so this kind of instability is bad for the global economy, and it's going to lead to huge fluctuations in stocks and bonds and every other financial asset with a downward bias over time. And so this won't be fun, but it's the necessary result of the kinds of mistakes we've made over the past 30 or 40 years.
When you have a national policy like in the U.S. where, to print $80 billion or $70 billion extra every month that you don't technically need, what kind of a message does that send to the rest of the world?
Well, that sends a message that we're not managing our currency to maintain its value over time. So all these guys who are dependent on dollars for their foreign exchange reserves or for the income generated by treasury bonds or whatever else, the message is that we're not a good bet, and that those investments are not going to hold their value over time. So when you see a country like the U.S. just flooding the system with newly created currency in order to manage its ever-growing debt burden, you really don't want to be dependent on that currency anymore. And that's the reason, well, it's one of the reasons for these trade deals that are being cut that bypass the dollar. It's simple self-preservation on the part of the countries that already own a lot of dollars and who don't want to own more. They're running trade surpluses with us, which means they're building up dollar balances, and they would rather do something with those dollars in the here and now, buy natural resources with them, convert them to other currencies that they think are better bets, or whatever. And so you're seeing a lot of countries dump their treasury bonds, or at least stop accumulating treasury bonds, and put their trade surpluses to work in other ways. And, for that to continue, as I said, we'll put downward pressure on the value of the dollar going forward.
Countries, I hear too, instead of using currency, Russia and China like to do barter. They like to swap hard goods for hard goods.
Sure. That's another way to do it, that avoids the necessity of owning a whole lot of dollars. So it's a lot more efficient to do it with currencies, but it's also completely doable to swap, timber for oil or gold for natural gas or whatever. These things are this is stuff that they all own and that they can all swap. So yeah, we'll see more of that in the future too, I suppose.
Right now we're in a sanctions war with Russia. Who's going to win that?
It's just for show, we will pretend to be mad at Russia for acting to preserve its own borders and its own national defense, and then eventually, over the course of the next couple of years, we'll gradually take off the sanctions and things will stabilize. This is the kind of thing that goes on all the time. And, Russia intervening in the Ukraine is just Russia being Russia. For the past 800 years or however long Russia has been an actual country, they've done things like this on their borders because they see it in their own interest to have stable borders where there's not an immediate threat right there just outside their own country. And so this is the kind of thing we should expect to happen, and I think to the extent that the U.S. does anything, it's more of a face-saving activity than it is an actual attempt to moderate Russian behavior. They're going to do what they do over there, and there's nothing we can do about it.
Are other countries at risk as well, besides Ukraine?
the further away you get from Russia, the less risky the situation is. If you're right on Russia's border, for your entire national history, you've been at risk. Poor Poland. Can you imagine what it must be like for them to be between Russia and Germany?
Poland has been, I would say, the international freeway for military action for the last 2,000 years.
Yeah, and there are long stretches when Poland doesn't even exist. It's just part of some other country. And then there's a war, and one of the resolutions is that Poland gets to be a country again for a while. And, the same stressful situation applies to basically everybody over there. So the map of Europe has been redrawn continuously for the past 1,000 years, and there's no reason to think that it won't be redrawn a few more times before we finally settle into some kind of stable structure. So yeah, it's nothing we can really do about it because we're far away, we're deeply indebted. The nature of warfare now is such that a shooting war between nuclear powers should be inconceivable. Only somebody who's basically crazy would start something that could turn nuclear over the Ukraine, and hopefully the U.S. isn't crazy. So,
well, I was going to say too, Ukraine, and I remember this, they gave up their atomic weapons, they signed an agreement with Russia, and Russia agreed if you give up your nukes, we won't invade. Well, we know what that piece of paper was worth.
Yeah. But we should be glad that it went that way, though, because the last thing we want is a nuclear war over there.
Yeah.
So it's much better that Ukraine becomes partitioned than Russia and Ukraine nuke each other's capital cities.
Yeah, it would have accomplished nothing except kill a lot of people, and Russia, of course, still would have won.
Yeah. And so the world would have been destabilized in a way that's a little hard to conceive right now. Imagine what happens to the stock market if somebody nukes somebody else right now, anywhere in the world. And, the global, besides hundreds of thousands of people being killed, which is obviously the main, problem with something like a nuclear war, but, the global financial markets, which are what we're talking about here, would be totally destabilized by something like that. So it's a horrible thing that we don't want to happen, and that restrains everybody. You aren't going to see the U.S. going to war over Taiwan and really aggressively intervening on Japan's behalf in their beef with China over those islands in the South China Sea. We're going to be seriously restrained because the nature of warfare is such that we can't predict the outcome anymore. Besides nuclear weapons, there's the cyber war side of things that is a completely brand new aspect to warfare. That's a battlefield that we've never been on before, and we really don't know what the impact will be of one country going in and shutting down another country's banking system or power grid or whatever. And those are the capabilities that we're developing. So
I know in Gulf War II and Gulf War I, cyber attacks, they had a virus in the printing machines for the Iraqi air defense system, and that virus kept them from picking up American aircraft on radar. So right there, the cyber war part of physical war has been used, and who can imagine with the new technologies we have today where we're just warned now there's a new virus that will attack or could attack any account in the world.
Yeah.
So, yes, it is a new way to look. We'll have more with John Rubino next on This Week in Money.
Always consult your investment professional before making any investment decision. More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with John Rubino, author of the bestseller, The Money Bubble. John, we've seen practice, I think, cyber attacks where suddenly certain utility companies see a glitch in their software. Is that going to be the first shot in the next war where all of a sudden the lights go out and maybe don't come back on for the next 10 years?
Oh, who knows? We have to hope we don't see something like that because the impact of it is really hard to predict. We've never tested anyone's ability to really get into an adversary's systems and start messing with them. And hopefully we won't have to because the worst case scenario of something like that is pretty catastrophic. You shut down somebody's power grid, especially during the winter. That would be, would cause millions of deaths, very possibly, and it would really impair an economy. And the same thing with the banking system, or command and control systems in the military as a prelude to an attack. This stuff is absolutely science fiction that has become real, and everybody in the world is building the capability to do things like this, and nobody really knows how vulnerable they are. So you have to hope that we're going to avoid things like this in the future, and that rationality is going to prevail. And because we have enough problems financially, you don't even really need geopolitics right now to envision a future that is really chaotic for at least the next decade, because we borrowed too much money, and the global financial system is deeply impaired because of all the bad debts that are continuing to go bad, and all the new currency creation that is taking place to lean against that bad debt wind. And chaos is probably the most likely scenario for the global financial system, leaving aside all this the geopolitics of China and Taiwan and Japan and Russia and the Ukraine, and the Middle East. So many things can go wrong right now that it's hard to imagine us getting through the next 10 years with stable growth and no major conflicts of any kind, and rising stock prices. That just seems like by far the least likely scenario going forward.
And also, every report we get now, climate change is real. Climate change has happened on this planet since the day it was invented. So, but we're just hearing that ocean levels are going to be rising dramatically over the next few decades. Maybe perhaps we'll get more world cooperation just since we'll all have a common enemy, the rising ocean.
Yeah. Well, climate change is not an investment thesis in the near term because its effects are primarily longer term. And not being a climate scientist, I wouldn't presume to have an opinion about how it plays out over the next 50 or 100 years. The worst case scenario there, too, is pretty serious. But I wouldn't include that in the average person's calculation of what to do with their money in the short run, that being the next 10 years, let's say. For that, you want to look at the numbers, and they're pretty horrendous. So, again, leaving aside geopolitics and leaving aside climate change and whatever else is out there that is non-financial, just the finances of the world are so horrendous right now that we've pretty much guaranteed ourselves some very hard times. And as individuals, we can't change any of this, and we can't really affect the course of the global monetary system. So all we can do is try to protect ourselves.
And so, John, what is the best protection?
Well, hard assets in times of inflation tend to be the best protection. In other words, gold and silver in place of dollar savings or euro or yen savings. If you have fiat currencies and big bank accounts and, money at home in a cookie jar or whatever, it's better to have that savings in a form that can't be created on a physical or electronic printing press by governments. So you want to move a lot of money into precious metals, first of all. And other hard assets like farmland and energy stocks and real estate, both at home and abroad. These are things that will tend to do better than financial assets in the kind of scenario in which the printing press spins out of control and begins to destroy the value of your currency. So to the extent that you're able to do that, start moving your finances away from financial assets and towards hard assets. And that's probably the best thing you can do.
Right now we have the International Monetary Fund saying real estate in Canada is overvalued by 15% on average. But I live in a city, Vancouver, where even at the height of the recession, the value of real estate dropped 10%. Within 9 months, it was back to where it was. And it continues to rise above the rate of inflation, slower than it used to rise, but still 50,000 people a year move into the greater Vancouver area. The demand for real estate in an area where you're confined by the U.S. border, the mountains, and the ocean continues to make property prices here unreal to the rest of the world.
Yeah, you you guys have an epic bubble going on there, and a lot of that is Chinese money flowing in, as I understand it.
Yes.
There's a huge amount of disposable income being generated in China right now, and a lot of free assets. And some of that is flowing into foreign real estate. And historically, the Chinese have a connection to Vancouver. And so you're benefiting from that. Well, to the extent that we consider this to be benefiting. A real estate bubble is not a good thing in the long run. But if you own property in Vancouver right now, it must feel like a great thing to see your condo going up by 30% a year, or whatever it's been in the last couple of years.
Yeah, but then you need a new place to buy, to live in, so, it's a wash.
Yeah, it is. And unless you want to cash out and rent for a while, that's disruptive for the average adult, especially with a family. But financially, I remember in the U.S. real estate bubble that a lot of people, especially in places like Southern California, did that. They sold their $1 million 2-bedroom house, rented for 3 or 4 years, and could buy that same house back for $400,000 at the bottom of the cycle. So the same might be true for Vancouver real estate owners. And the numbers are getting to the point where maybe it's worth the disruption, because if it's a $300,000 or $400,000 swing in the value of your property, that might be worth renting for a few years. Who knows?
And I think a lot of places in BC, even in communities where their natural resources have dried up, the mine is empty, the trees have all been cut down, the real estate prices are still astronomical, even though the economy doesn't support it.
Yeah, and
those are the areas where perhaps real estate values could collapse.
Yes, and that's really a local decision. You kind of have to look at your surrounding economy and decide what you think about its future versus the price of the real estate. But there are places where no doubt that's the calculus. The economy isn't as good as it used to be. Jobs aren't being created the way they used to be, and yet real estate hasn't reflected that yet. So the problem with your home is that it's a hard asset to trade. It's not the kind of thing where you make a phone call and you're out. And so it's a tough one, but in some places the time is now to sell, and so hopefully some people will be paying attention to this and save themselves a lot of heartache by riding the value of their house back down.
What about 3D printing? Is this going to replace factories where they make objects? Instead, people will just be making their own little, key holders and places to hang up their coats at home, and they won't be buying these little plastic objects made in China anymore.
Yeah, 3D printing is going to revolutionize manufacturing. And I think the net effect of it is going to be kind of hard to measure because it's such uncharted territory. But I'm writing a magazine article on the transition that retailing is going through right now. And I just interviewed a retail analyst the other day who said that it's possible that currently dysfunctional store chains like Radio Shack could become 3D printing centers. Where they have, you send them the file for something and they create it for you and then you pick it up. And so you aren't buying it from Amazon anymore. You're just going over to the Radio Shack and picking it up or whatever. And that's going to change the nature of factory work, and it's going to change the nature of retailing in general. And we don't know exactly how it's going to play out because we don't know what the ultimate capabilities of desktop printing will be. But I think they're going to be pretty spectacular, just based on the really crude initial versions of these things. This is like the personal computer of the 1970s, and when we have Moore's Law applied to this kind of technology, you're going to see spectacular progress in the next few years, and it really is going to change the nature of factories. And as you said, it'll affect China because they're the guys who make the cheap stuff right now that gets shipped across the country or shipped across the world. And when you can make toys and lots of other small things without a lot of moving parts at home or in your local Radio Shack, you don't have to ship it from another country. And so the whole factory floor of the world thing is going to change dramatically. So China's got to move upstream and make some rapid transitions in their manufacturing base in order to keep up with this. And I wouldn't even pretend to know how it plays out, except that it's going to be disruptive and it's going to be fascinating.
And people are saying, again, Canada being a country that supplies natural resources, you still need the raw material to put into those 3D printers.
Sure. Yeah, and it's not clear exactly what those resources are going to be, what the materials will be, but I think there will be a broad spectrum of them, and I think some of it, no doubt, will come from the resource countries like Canada and Australia. And so that's, other things being equal, it's a good thing. And to the extent that you can mine the material or create whatever raw material you need for this, and then do the manufacturing at home, do it within the country, that's a great thing, because that means you don't have to pay anybody else for anything.
and I could see, locally they could produce a snap-together car for you, know?
Yeah, where you print the pieces of the car, and then a robot assembles it. Of course, that, what does that do to the job market? See, that's the other side of this. If we're going to automate the manufacturing process, then factory work is even more seriously impacted than it was by China. And so you could see the manufacturing itself come back home from China, but not the jobs. And
I just saw an article saying 2 out of 3 jobs could be replaced by robots within the next 10 to 20 years.
Yeah, and it's not just the manufacturing thing. It's restaurants, for instance, where you can have a tablet at your table, and you input your order that way, and you don't even need a waiter for that. And in the back of, say, a McDonald's, you have robot burger flippers. And it just goes on and on,
What do you tip
automated,
I was going to say, what do you tip your robot?
Yes, what do you tip your robot? Yeah, who knows? And so a lot of the lower level jobs that are now either entry level for young people coming in or, basic sustenance for adults with families, those jobs are going to disappear. And the big question from the point of view of social stability and public policy is what replaces them? Are there other jobs in the fields of building these robots or servicing them in some way? Are those jobs going to be plentiful enough to make up for the fact that we lose a lot of basic service jobs? I don't know. It's that must be a nightmare for public planners, because even if new jobs come along to replace the old jobs, is the timing perfect? Do they come along at exactly the right time to replace all the jobs that are being wiped out, or is there a big lag in which we have millions and millions of unemployed people that see their lives wasting away, and they're on welfare for as far as the eye can see at huge cost to the government and taxpayers? Who knows? This is an interesting transition from a technological standpoint, and a very scary one from a public policy standpoint.
Some people have described our Prime Minister, Stephen Harper, as a robot. Maybe he's just the first one.
Now, John, if we could replace politicians with robots, I think that would be a fun change.
John, is there a website somebody could go to check out your books, your publications, and your thoughts on what's going to happen to the economy?
I run dollarcollapse.com, which covers a lot of what we talked about here. And the new book is called The Money Bubble. There's a big ad for it on the website, so you can go there, check it out, and buy it on Amazon or wherever.
After the break, Dave Skarica on This Week in Money.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
This Week in Money is archived online at TalkDigitalNetwork.com.
My guest is Richard Knowles of Knowles & Associates in Vancouver. He's a personal and corporate financial planner. He's also a recipient of the 5-Star Wealth Manager Award, something that people in your business, I'm sure, are very proud to have. Welcome to the show, Richard.
Thank you, Jim.
Well, instead of talking about Canada's financial world and what's going on, you have just come back from a holiday in London, probably the financial capital of the world. At least they like to think that. And for hundreds of years, they were absolutely correct to think that. Richard, do they still have that attitude there?
Well, yes, I think they do. I think the general formula in Britain is a centralist approach. You can see this around the world. You can go to different places in the world, and you can see whether they feel their perspective or their position in the globe is driven by their productivity or whether they are reliant on others. Here's an example. In Canada, we effectively, while we respect ourselves very highly, and that's a very good thing because we deserve that respect and certainly should respect ourselves based on, our productivity in this globe, frankly, we rely on others. So our perception is that from a governmental or philosophical standpoint, I don't like to use this word, but in a sense, in the true form of the word, pandering, I guess, is a word we can use. But we seek out the affection and goodwill and good business of others to succeed in Canada, you see. So when we look to be successful here in Canada, we look to the States, our biggest partner, and what they do. The old joke, when I was growing up and when my dad was in, the UN and working as a diplomat, is the United States sneezes, basically we catch the cold. And now it's China and India, all the growing economies. We feed these economies, and we rely on them to buy our goods. London is a little different. They're a lot different, actually. They're a central capital of trade and commerce. So a lot of things go through London and have for 1,000 years there. And we're looking at a country here in Canada where we're lucky to hit 200 mark, But when you're looking at Britain, you're over 1,000 years back and more, clearly more. If you look at it as a central trade place, Verulamium, which is just outside of London, it's actually not Roman, it's the old British center of commerce, one of the most famous centers of commerce of the non-Roman Empire, before Rome actually positioned itself. The Romans came into Britain. Now that's before London. Londinium was the first city of Britain, one of the major British cities created by the Romans. So think back a long time. We're talking over 2,000 years that the British have been a center of trade and commerce. In fact, Verulamium, where I visited and studied its commerce and trade, traded with the Romans as a separate British trade center. Now, this is fascinating when you think about it, because they've been doing this for over 2,000 years, certainly. And this is why they're very centralist. They believe in themselves. They have a great sense of history and faith in what they do. This is something we miss here in Canada. We feel ourselves so new to this world, this new kind of age, that while we're more receptive, I think, in Canada to new ideas, technologies, ways of doing things, we really don't have that belief in ourselves to be able to implement very innovative technologies and innovative ideas. We always tend to default to see if the U.S. agrees with us or wants to do it our way. We used to be much more forward-thinking. Back up until maybe the 50s, our politics and everything else was very separate from the U.S., although we worked very closely with it. The U.S., however, in the same span of time of 200-odd years in the New World, has in fact surpassed the strength of will, if you want to look at it this way, of London and of England in its control of the economic control of the world. And that's simply because they have created a new economic center in the world for the last, couple of hundred years that is a place that you can make even more wealth and more opportunity. One of the big character traits differences between the United States and Britain is that Britain holds on to old ways of doing things, whereas the United States allowed new age economic growth. Now, their power struggles in the last few decades, particularly since about the 60s and 70s, they've exceeded themselves in their inability to be democratic. For example, they're currently considered a plutocracy, according to most pundits, political pundits. And a plutocracy is basically a ruling of the elite, the wealthy elite, which is exactly what it is. So democracy really is, if you will, a kind of an afterthought there. It's required to be able to hold the states together and to be able to implement laws and rules. But in effect, the plutocracy is the ruling class. The moneyed people are the ruling class at the moment. Whereas it's always been like that in Britain, to be honest. Much of the ruling class has always been moneyed people. You even look back to their insurance corporations, Lloyd's of London, for example. When you look at Lloyd's, it's not like an insurer here in Canada or in the United States. Lloyd's was one of the first insurance companies ever created. And they are listed with what they call their names. The names are extremely wealthy and moneyed people that have lent money to Lloyd's to reinvest as insurance policies to others. And the rate of return that the names receive, these individuals receive, or groups of individuals receive for lending their money to Lloyd's for high-risk insurance, is the premiums that are received by Lloyd's minus Lloyd's cut. And then that money is paid to the names, these individuals and groups, to make a profit for lending their money on to create insurance policies for others at high risk. So this is an example of things you would never see or typically not see in the New World, whereas you do see in Britain. So it's quite a fascinating difference.
Do you still see guys wearing their bowler hats and pinstripes on their way to work on Oxford Street?
Yes. Yeah, you can. It's not that common, but I did see one. Actually, I did see a bowler hat. It was really something. That's what I was talking about with tradition. You know, tradition goes a long way. And of course, the classic expression, you know, the old boys network, that was created in Britain. It was the classic old boys network was originally created in Britain. And it was transferred over to this world, in the New World after that. You think back to the days where, you know, the Rothschilds, the old Meyer family that changed their name to Rothschild or Rothschild. They were indeed around, when you think about the fact that Rothschild himself was going to short the stock market in London after the Battle of Waterloo. Now this is history. When we think of the Battle of Waterloo, when you went to school in, you know, Canada, think of Battle of Waterloo as some ancient times. But this was the beginning of some of the biggest financial moves of some of the wealthiest families that exist today were being done at that time. Now, we didn't have that in Canada. Canada was not even a foregone conclusion yet, and nor in the United States. So much of the old world money has been going on for 1,000 years with manipulation of stock markets, with moneyed people, closing of banks, private money being made. This goes back a long way, and we want to look at history of banking and insurance. That's the direction we should be going, and also always should, because that's, in a sense, that is our founding fathers. That's the way we work today, and they are indeed still in control in much of the world, of the financial world. One of the biggest concerns I have at this time is the LIBOR scandal going on with the interest rate scandal in London. This big review, you know, having a Canadian like Mark Carney, who was, you know, our ex-Bank of Canada governor, moving over to that post has been quite an accolade for Canadians. I think a lot more than we credit, simply because the whole concept of having such a historic banking central adopting a Canadian is almost unheard of when you think about it, because of the way the old boys network works. So clearly they were trying to wash their hands, I believe, of the potential threat of this LIBOR scandal now feeding in on the Bank of England. They wanted to get their old boys out and get somebody fresh face on the front, so that they could see that something was really going on, something was really being done about this problem, and they weren't just the same old. And I think it was a very wise decision, based on that reasoning alone, to bring over someone like Mark Carney.
Did you hear any comments? Did you hear any comments about what people thought of Carney's job so far?
No, nothing that I've been able to get feedback on. I do have public commentary. There was actually some headlines. Carney was in some of the headlines because the Bank of Canada governor was being quoted as saying this or that. There was positive. The one point and this is one thing you always want to look to see, what's the feeling of the people. You can look at the magazines, because the magazines really do rule a lot of the people there. How they might feel that day. But clearly there was a positive tone in all of the things I had been reading about Mark Carney, you know, so they weren't, you know, slamming him or anything. They were really being sponsoring him in a positive light. And for a British group to do that, they're very, very self-aware, and in fact very, I don't want to use this word improperly, but I mean ego-oriented. They were very proud, I think that's the best word, of themselves. The British people, they're very proud people. They work and slog things out together, and they believe in their heritage very much, and they're trained to, in most cases, believe this socially. To allow and to be so positive about an outsider, even though Mark Carney's a Canadian, he was trained in the U.S. in banking, and he, you know, at Goldman Sachs, and then he comes back to Britain, they can embrace him because it's like one of their own. You know, a Canadian is kind of like a expatriate Brit, you know, they still sort of can see that. and they can accept that. But I think it still rubs them a little bit the wrong way to have someone who's not British-born, trained, and through their system up there. So that can bother them, I think, to some degree. But I didn't see any of that. It seemed to be very well respected and very positive response in the newspapers.
More with Richard Knowles next on This Week in Money.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with Dave Skarica, bestseller, The Money Bubble. You've got a new book. What's the name of that book again?
Well, this book is going to be called Collapse, How the Federal Reserve Created a New Bubble and Why It Would Burst. And right now, like I said, I'm just kind of in the initial, I just finished writing it, and I'm in the initial stages of
I live with a writer. I've been married to a writer for 35 years. I know
you understand.
It's like giving birth to a baby. And believe me, I go through the labor pains.
Yeah, so you understand.
I understand. A book is one of the world's worst projects, but when it's done, it's the happiest.
Well, the thing about this book was I didn't even want to write it, but what happened was in the fourth quarter of last year, and this is kind of continuing my theory on the market being a bubble, was I started seeing the Yelps and the Facebooks and the Twitters and, in my opinion, all this nonsense and these crazy valuations. And you know what? Like the financial media will tell you, oh, it's not as bad as 2000. These things actually make money now. Well, who cares? Like what? Because they trade at 30 times revenues and and some of them don't make money yet, or they trade at hundreds of, times PDE. That somehow makes it like that much better. It's just a different bubble in a different way, right? So, it may not be the outlandish stupidity that was happening in 2000, but it's just a different, it's a lesser form of stupidity, I guess you could say. So when I saw this happening, I just realized, you know what? The Fed's money printing has helped create another bubble in the stock market, and I think I really need to express my views on this and talk about why I think this bubble is going to, collapse. And like I said, I think you can't look at it in a doom and gloom way. You just have to look at it realistically, that these things are crazily, overvalued. They're probably going to fall a great deal. But out of that rubble, you're going to get some great opportunities. Another example I used, I talked about Crocs earlier, is, if you want a company that's actually a quality company, is Amazon.com went from 113 to 550 during the 2000 to 2002 bust, and has since come back to roughly went as high as $400 a share. Now, granted, it's overvalued again when it was at 400, but that's the example that you at the bottom you're able to pick through the rubbles, and there'll be real quality companies there that are really cheap and that will have great opportunities. So I prefer this bear market to happen because I think there'll be some long-term opportunities there to be had. And in the meantime, I think you can invest, just to go on to the next segue, is that I think you can invest in say, I think that gold has now again become the contrary investment. That if you look at 2007, 2008, gold kind of rallied with the market, then crashed with the market. I think now it's more like the 2000 to 2002 period, where gold was weak in the late 90s while the stock market boomed, just like gold's been weak for the last few years. And gold might be the contrary investment of choice while the stock market tanks. And I think the key turning point for gold, because, we've seen a little rally up the lows from 1180 to 1320, but I think the key indicator for gold and the key aspect for when it really turns is when the Fed starts hinting that they're going to stop this taper. And not only are they going to stop the taper, but they are going to print more money when the economy starts to fall, the stock market down. And I think that's when gold and gold stocks will really, really take off. Now, that could happen in 2 or 3 weeks. It could happen in 2 or 3 months. it could happen in a year. I don't know when it's going to happen, but that is going to happen.
And it's funny, too. You say the same thing as everybody else. This thing is a house of cards. Some kind of wind somewhere is going to blow it down. And what's going to give you the most stability? Well, how about something heavy? The Canadian Mint had a challenge. I lived in Winnipeg where the Canadian Mint was, and they said if you can pick up a bar of gold with your bare hands, you can have it. But of course, they're beveled. So when they do it kind of pyramid side up, there's no way you can get your fingers underneath to walk away with $500,000 worth of gold. But unless you have the world's strongest fingernails.
Well, remember in the old James Bond movie, Goldfinger, his way of manipulating the gold market was he knew it was too heavy to steal, so he was essentially just going to nuke Fort Knox and then have it radioactive for
Kelly's Heroes. They're picking up these crates of gold, honest to God. It's 80 pounds. This little tiny thing that's shiny weighs so much you have no idea until you've tried to pick up one. And how many people, by the way, get the chance to actually pick up a piece of gold?
Or bar gold. And a perfect example of what you're talking about, how it's tangible, it's real, it's like in your hand, it's like money that can't be devalued is, I think the ultimate sign of a bubble was like late last year when Bitcoins, which is just some BS virtual currency that's worth nothing, was almost the same price as an ounce of gold. That Bitcoin at its top back to roughly $1,100 and gold's bottom was $1,180. So that, to me, was the real sign of this kind of top of this financial, bubble. Now, I understand the concept of a virtual currency and having an encrypted currency and be able to buy things online with some semblance of safety and maybe getting over foreign exchange, fees and costs, etc. But to have a currency that's basically invented by computer nerds backed by nothing makes absolutely no sense. And by the way, there's a great chart. A guy named Maybane Favor has a website, madefavor.com, and he's got a chart comparing Bitcoins now to the tulip mania.
I was just going to say tulips, man, they're so pretty, but totally useless.
Well, exactly. Like actually, just quickly, Jim Rickers has a great thing, and what he says is that Bitcoins is tulip mania without the tulips.
I told my dad we had dandelions on our farm, and in New York they were making dandelion salad. And he said, it's a damn weed. Are they that stupid there? Anyway, thanks a lot, Dave, for talking to us. Is there a website people can go to take a look at some of your stuff?
Yeah, if you go to addictedtoprofits.net, I have a free e-letter, which, I post our interviews such as these. And I also have articles I write, etc. And if you like that, I have usually promotions for my paid newsletter every month or two. And I probably actually can do one in about a week or two. So if you sign up to the free letter, you'll get some samples of what we're talking about. And then if you really like it, you can try the real thing afterwards. So it's addictedtoprofits.net.
Thanks to our guests, John Rubino and Dave Skarica, and thank you for listening. I'm Jim Goddard for Phil Mackesy. We're back next week with more This Week in Money.
This Week in Money is a production of Howe Street Media Incorporated.